Okay, peeps, welcome to Park Avenue Forex. Tom here. I had an update for the sterling yen before, and I went to go mess around with it to throw in like this other video inside of a video, and I am a totally technical idiot. So I ruined it. So I basically took it down and I'm redoing it. So here comes the analysis again. Okay, sterling yen still does have a bullish undertone to it, and we were absolutely correct when we were talking about a retracement from the trend reactionary number up at 136.54 to come back down and touch this trend degree line, which is 135.05. Perfect retrace. And then a rebound. We also have another trend degree over here. Now, trend reactionary numbers are major points in the marketplace, and trend degrees fall within trend reactionary numbers. So if you would look at, people are asking about like trend reactionary numbers. Trend reaction numbers are basically kind of based off of a wave pattern, a Fibonacci wave pattern. Okay, not an Elliott wave, although Elliott wave is rooted in Fibonacci points. This is a little bit different. So what they're major turning points in the marketplace that I calculate before they actually happen. So back in time, I said, say when the market was at this point, I went back in time and I calculated, I said, okay, so a major liftoff point could be 132.65. Don't know, because what could occur at 132.65, it could hold and then push down to a lower trend reactionary number. But in this case, the market rallied up off of the TRNs. And if you look at where the TRNs are, there's always some type of action that occurs in the marketplace at the TRNs. Now, we predicted this TRN point when we were trading in here. So I asked you guys all to go back and look at the other videos so you see it's not a bunch of hooey. It's real. All right, so let's look at what's going on right now. I expect that there's going to be a pullback, and I would like the pullback to occur maybe to this support line. Now, a support line is just basically me connecting my demand points, right, and throwing them out into the future. What makes me think that is because when we went over that little trade filter that we had. So if I connect my supply points, these points here, okay, the breakout occurred on an up close. All right, so that would mean that the marketplace, should be able to pull back to at least the trend line, maybe even break back into the trend line, and before it can gather enough steam to go up and break up above the TRN, and then it's going to have resistance at this point right here, which is another trend degree of the marketplace, then another trend degree. So it's going to bounce around and then before it hits the target up here of another TRN. Now, if it can't make this TRN, if it doesn't touch it and comes back down, it's basically showing, okay, it might be a little bit tired and it needs to retrace. It could retrace all the way back down to the other TRN, but still there's a bullish undertone to this. And if you're just getting involved with this trade right now, there's really nothing to do but just to wait. We're going to need some pullback in order to see what happens here. Now, when we get the pullback, what are we looking for? What should we be looking for? Should be looking for like demand points. Okay, so if you break this demand point, where's the next one? It's down in here, so it's right at, it's a little bit below the trend line. But this is a major point of strength, should be a major point of strength, as well as this one. So I would like to see a pullback into this area of the triangle, possibly even touch the bottom of the support line here, and then break back up and then attempt to get over the top. It needs to take a little bit of a breather. It's markets always breathe in and breathe out. So I hope that's beneficial for you guys. Oh, let's do another thing. Let's add really quickly our Fibonacci retracement. So how do we do that? Just like we did in the other video, we always keep the same method. We have this high here. All right, I don't know, it needs another down, it needs another lower high to actually say, okay, it's a It's a supply point, but right now, it's the only thing we got. So we're going to go over to the left. To the last time it traded higher, it's right here. That traded higher the last time. What's the lowest point in between is this one. So we're going to work off of this to this for retracements. So we got, look at the market came down, sat right on the 236. Now, if it breaks down to 236, okay, now we're going to start to get traders that got long here. They're going to get nervous, and it's going to push down, and it could push us right down to the 618, you know, before it starts trading back higher. So really, patience is going to be needed to see how the market reacts down in here. Now, if all of a sudden it roars up and gets up and through here, then we got to start using these levels to see if the marketplace will hold and keep pushing us up. No, it's not much of an insight there, but that's the only thing that's happening right now. So look forward to seeing you guys soon. Cheers.